Digital financial services are becoming increasingly popular in the public sphere. There are signs of it everywhere, from the markets in Kampala to the villages in Wayanad. We observed how the older paradigm overlaps with the new as people decide how they would like to make digital their own. In this episode, we will browse through a folder of stories to explain how non-digital tools continue to be used for regulatory reasons. Paper records also provide an air of legitimacy to the onboarding process that is otherwise conducted in a very rough and ready way. They also serve as a backup in areas where the internet and power supply are unreliable. But an over-insistence on any one way of doing things, whether it is digital or physical, only adds to the end user's stress. You have to carry your original ID for the onboarding process in Bangladesh, Indonesia, and Uganda, but most people are not aware of the rules. We met Shurja Begum in rural Bangladesh. She wanted to open a Nagad account for her daughter, but the bank couldn't help her because she was only carrying a photocopy. She got home and found the original ID with her husband's help, but the back and forth left her flustered. India has recently launched a secure cloud service for its citizens called DigiLocker to overcome some of these challenges related to paperwork. It has also introduced virtual IDs, but many agents are not aware of these solutions, and people tend to save their IDs on their phones because it is repeatedly required for verification and access not only in the financial sector but otherwise too. Though it seems like a duplication of efforts, paper forms coexist with digital ones for various reasons. The banking systems in all the 4 countries were gradually digitized from the early 2000s, but they have not been able to keep up with the latest innovations in the financial sector. Banks and other financial institutions are also expected to keep a physical record of their business for operational, legal, and statutory reasons. You therefore see a persistence of paper at the service outlets. Many users also prefer physical forms. They go through the fine print with a loved one at home at their pace and visit the bank or the agent when they feel more ready or confident, because the text can be jargon-heavy and intimidating if you are not fluent in English. Some countries like India are trying to streamline this process with eKYCs, where the banking institutions can get their customers' details by entering their unique national ID number. There is no need to fill forms manually. Many small banks have digitized their onboarding process, but they need 2 identical signatures in addition to the biometrics to close the form. Janaki is a 40-year-old homemaker in Varanasi, Uttar Pradesh. She wanted to open an account with a microfinance institution to join a loan group, but she struggled with the signatures because she has a cognitive disability. There was no alternative left for her but to find guarantors and visit a physical branch 30 minutes away. You don't need to carry a passport photo if you are being onboarded digitally. The agent can click your picture on site and upload it, but many people can find this process awkward. In Indonesia, we noticed how they would excuse themselves to another room to finish their face verification with some privacy. It can also violate social norms if women are asked to lift their veil in a public space for a photo. The quality of these photos is also suboptimal because of the cluttered environment in which they are taken. Itinerant agents, on the other hand, have their own challenges, but some of them have found creative ways to get good photos wherever they are. The dependence on paper continues long after people have been onboarded. They like to maintain a physical record of their account opening and transactions in the form of receipts and passbooks. It grounds the digital experience in something tangible and provides reassurance. Many banking agents in India and Indonesia therefore offer these services at no additional cost. They also provide manuals and other learning material for those who want to learn more about the services offered by digital finance. Here is an example from Indonesia. Many people write down their PINs and passwords on paper because there are just too many to remember. We observed how some agents in Bangladesh do the same for their customers at the end of the onboarding, but if you lose the paper, all is lost. What are some of the easy ways in which we can help people save their critical information in a more secure way? Many communities are learning to balance their use of cash with digital services because the latter is not contextualized enough. For instance, small and informal businesses have short cash flows, but in some countries they are not allowed to withdraw money until they reach a specific amount. And then too, they are charged a transaction fee that is not feasible. Bu Zara is a 36-year-old QRIS food merchant who operates online and offline, but most of her customers pay in cash and she rarely reaches the digital threshold for withdrawal. Similarly, Happiness has a stall in the local market at Nakawa, Kampala. Her goods cost as little as 500 Ugandan shillings. She prefers using cash over mobile money, particularly because the withdrawal outlets are closed when she closes her shop, but there are no such restrictions with cash. In some cases, cash signifies something more than what meets the eye. Gopika is a tribal student, 29 years old. We met her at a vocational training center in Wayanad, Kerala. Here she explains how she's on top of things. She is tech-savvy, she manages her husband's finances, but she doesn't send money to her parents digitally. It is more respectful and expressive to give it to them in person. They feel more cared for that way. In a rapidly digitizing world, some physical objects may seem outdated, but they signify a certain sense of maturity on the adoption curve where people consciously choose how they want to manage their money. It is therefore crucial to adopt a phygital mindset while designing for them. That's how we get truly bottom-up and inclusive financial systems.